It's the start of March 2021 here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, more stimulus. Still, stimulus talks continue to roll on, and for some, that could mean round 3 of stimulus checks. That being said, a proposed change in the Senate would mean that fewer may qualify for the 3rd round of stimulus checks. President Biden agreed to stricter income limits on new stimulus payments, phasing out stimulus checks totally for individuals earning more than $80,000 and households earning more than $160,000. These new caps are $20,000 lower than the previous levels. The plan would send $1,400 checks to individuals earning up to $75,000, single parents with children earning $112,500, and couples making $150,000, with the amount gradually falling for people with larger incomes. Also removed from the latest bill is the proposed increase in minimum wage to $15 an hour. The Senate will take its first procedural vote towards passing the relief bill Thursday. Number 2, interest rates. Interest rates continue to move higher. We began 2021 with the 10-year bond rate at 0.92%, and since then it soared nearly 60 basis points, recently touching 1.5%. While the rise in rates indicates higher expected economic growth, there's also a portion of the increase that is reflective of higher inflation expectations. As benchmark interest rates continue to rise, so does the cost of capital for both individuals and corporations looking to borrow. While rates remain low by historical standards, the sharp and sudden rise has begun to weigh on the equity markets, specifically those growth-focused stocks who are more sensitive to interest rate changes. Number 3, growth versus value. Despite what has been a massive outperformance of growth stocks versus value stocks have finally started to play catch up and are outperforming by a considerable margin so far in 2021. As mentioned in point number 2, rising rates have been weighing on growth stocks. As a result, value stocks have outperformed by roughly 8.5% so far in 2021. Value stocks are known for their lower than average price to earnings and price to book ratios, but also for lower than average sales and earnings growth rates. Looking at long-term performance, value stocks have outperformed growth stocks in nearly all markets. But in strong bull markets, such as the one we've been in, growth stocks are more likely to be winners. That being said, we believe that value will continue to outperform growth. And that's been your Market Minute for the month of March. Thanks for listening.